Welcome back to Mango Invest. This is going to be the first portfolio update of 2025. So just want to say thank you to all the recent YouTube and Instagram subscribers over the last sort of month or two. We've had a massive sort of influx within that sort of short period of time. Just people like you, avid dividend investors who just want to see, other people's portfolios, see how they're doing, see their profits, their losses, and just to get some ideas for yourself. And in this channel, we do it in a very candid, very honest, transparent sort of way. So I'm going to tell you, all the profits, all the losses, all the bad decisions, all the good decisions that I'm making. Um, so if you want to stick around for the dividend investing journey and the goal to get to $1 million, subscribe now. All right, so we'll get straight into it. So we've now got $607,000 of total equity within the portfolio, and we've got $5,000 USD in cash. So if we make that conversion to Australian currency, we're now sitting at like $7,000 cash, right? So that's now $614,000 of total, equity plus cash within the portfolio. Now you'll see we're negative $20,000 all up. That is only really showing my negative positions because what happens within this sort of the stake interface. Once you sell off all your profits, such as Amazon, Apple, Microsoft, and Tesla, we've had massive gains with those companies, and you sell it off and then put it back into other dividend investing companies, or you put it into the cash. It no longer shows up as overall profit within your portfolio. So, just for a basic metric, I've been investing since 2019. And over that time, over that 5 year period, I've invested $362,000 of my own money, just dollar cost averaging, regular deposits here and there. We've now grown the portfolio to $614,000. So I'm not too sure what kind of total return that is. You can get your calculators out and just have a look. But they're the numbers that we're looking at for the moment. But we'll get straight into it. So we'll have a look at the holdings now. I've only recently purchased FMG within the ASX. I didn't really like investing in the Australian stock market just because you don't get access to the big companies. And what I've noticed, the dividend yields aren't as high as what you'd find in the US market. If you object to that and you disagree, just chuck it in the comments below and just let me know about that one. But FMG, mining company within the Australian sector, it's got a dividend yield of 11%, and I've only put roughly $7,000 in there for the moment. We're currently down $191. We bought 407 shares for $18.04. They pay twice per year, so biannually. So won't really see too many dividends here and there, but just wanted to get into the Australian market, get some Australian dividends. It actually offers 100% franking, which is essentially like a bit of a tax credit. So that's another reason why I wanted to get into the Australian market, is to take advantage of that sort of tax incentive there. But with the US portfolio, this is obviously the biggest chunk of my whole net worth essentially. But we've got all the popular names, Apple, Coca-Cola, Microsoft, Realty Income Corporation, SCHD, and Tesla. They've all served me very well over the years, but we've done some massive restructuring now. You're probably noticing, if you've been watching my videos for more than like a month or two, you can't see the Bank of Nova Scotia or the Bank of Montreal. We've actually sold that company, and we've reconsolidated that into SCHD, and that was only just yesterday. So I was looking at some metrics on Seeking Alpha, and I was just looking at the total return for the banks of Nova Scotia, the Bank of Montreal. Looking into companies like JetQ and SCHD, it may look like they're paying a solid dividend to you, but the stock price really isn't rising. I'm really now not just focusing on dividends. I'm focusing on the total return of the funds themselves as well. And then when you did that comparison with those banks compared to JetQ and SCHD, you realize that you're actually missing out on 50% of gains, 80% of gains over like a 1 year, 3 year, and a 5 year period. So it's it's pretty crazy to think that you kind of need to be constantly updating yourselves on these total returns, because otherwise you won't be able to get ahead. You'll just be stuck in some sort of rut that you can't really get out of. So make sure you keep updating, your knowledge, keep doing those comparisons, and start to jump into funds that are, best sort of suited for the overall sort of total return. But we'll just have a look at the recent trading activity, Wall Street, and let's just have a talk about what we've done over the past. We'll go from the 7th of Jan. So this is the selling of JEPI. We've done 2 sales here, and the reason was we wanted to buy JEPQ. So you can see the $59,000 worth of total, the selling of JEPI, and we've bought JEPQ. The reason being, they're pretty much the exact same fund, although JEPQ is a little bit more volatile, and the reason for that is because they've got a higher percentage of their portfolio in tech, whereas JEPI is the more conservative version. Yes, it does invest in tech, although the weightings within their portfolio is slightly less, and they focus more of the percentage on other sectors rather than tech. So, but they have the exact same companies in them essentially. I'm sure they've got minor differences here and there. We also bought $773 more of Moderna. This is the yield max version of that. So we bought 150 shares at an average price of $5.14. We saw Alibaba going down in value even more. So we bought 2 more shares. That's now brought my buy price down to $128 per share, which is pretty good, down from $130. And then this was, last night during trading hours in the US market, we had BMO, we sold all of the shares there. The Bank of Nova Scotia, we sold all of the shares there. And you can see that we've sold roughly $19,000 between the two. And we've now bought $19,000 worth of SCHD. So overall, we're probably taking a little bit of a dividend cut. But the rate that SCHD are increasing their dividends over time, I thought that was more than justified the reason as to why I did that. So I think we're going to get a better total return over time, just to make this this recent sell here. Now, I saw that Coney dropped below $12 per share. I told myself that I wouldn't put any more money in the yield max ETFs, but Coney dropping below $12 per share, I couldn't not buy it. Do you know what I mean? So this is actually an accident. There was a bit of a glitch in the system, and it didn't really. My first trade didn't show up, so therefore I bought another trade later on, and then realized, I've pretty much just double tapped it. So I didn't really care. It's an extra, $2,200 of total Coney. It's got me a lot more money in the long run, so I'm not really too fast. I've had a lot of cash on position anyway, so I don't really mind at all. We'll have a look at all the dividends that we've received. Well, actually, we'll just go in the date range. We'll have a look on the 1st to the 11th of January. We'll filter out. We'll just have a look at the buys, deposits, and dividends, and we'll just have a look. So you can see some recent dividends here. LTC, $91.50. You can see we've bought more Misty, which is another yield max ETF. So just over $5,000 worth. JEPI, we've received a last minute dividend from JEPI being $402, but we've recently just sold off, and you can see that we've bought $60,000 of JEPQ. We bought more MRNY. Oh, sorry, no, we didn't buy. That's actually a dividend. Beg your pardon. So $501 worth of MRNY. And then the very next day, QILD paid me, the biggest dividend that they've ever paid so far. It came in at 34 cents per share, as you can see there, and just over $1,000 just into one payment. It's pretty crazy. Usually they've been paying me around, that $700 mark. So that's pretty cool to see there. MRNY, again, we bought 773. Barber, we bought those extra 2 shares. SCHD, you can see the $19,000 there. And Coney, we've had those recent 2 purchases there. Going back to the holdings, so my biggest losers at this current time is AGNC. again, I've been investing in this company for many years, and we're currently negative $8,000 US. So if you make that conversion, what's that? What is it, like $14,000 Australian, roughly speaking, and that's a negative return by 13%. So if you click into AGNC, my average buy price is sitting around $10.53, and then you can see that massive line there. You can see all my buys, all my trades. Um, yeah, I'm still really bullish on AGNC. It pays a really good dividend. And why the hell would I sell it if I'm in a loss anyway? So I'm now here for the long haul. If it does increase in value, I won't buy anymore. I'll just continue to hold, because the dividend is very attractive. It's just that overall sort of total return is probably in question. I think what I'll eventually start to do, once we do start to see some profit, I'll allow it to rise and try and get as many capital gains as possible. And then probably once it reaches a stock price of like 15, 16, $17 per share, I'll probably look to sell that off, get that capital gain, and then put it into a company like we were talking about before, like JetQ and SEHD, that have probably a higher total return, not necessarily relying on just the dividend, but also the growth at the same time. So that's where I stand with AGNC. I really don't think it's a risky company at all, or real estate investment trust. Um, the company is doing its thing. I've looked at the financials a couple of times, and nothing is really of concern. Obviously, the REITs haven't really been performing all that well over the last sort of year or two anyway. So I think it's just the fluctuation of the market. It's just doing its thing. But another massive loss in the portfolio is Alibaba, negative $14,000. Which what's the conversion for Australian currency? What would we be looking at, like $23,000, roughly speaking? You guys can obviously do that conversion, but this is how it's tracking within the last year. You can see, the recent buys back in 2022, another one in 2023, and then we've only done, two smaller purchases. We bought 11 more shares here, and then two more shares last night. But I'm actually really bullish on Alibaba. I mean, you go and you look at their financials, and you have a look at their revenues. You have a look at their assets versus their liabilities. You have a look at the amount of cash that they have on position. This company is currently doing a hell lot of share buybacks, which is only going to increase their stock price overall, and yet the stock price is still going down. Why? The only thing is the geopolitical tensions. Yes, China, they have a lot of economical dramas at the moment, but a company like Alibaba, with that much cash on hand, with that many assets, with such little liabilities, and steady sort of revenue growth, I feel like the stock price is just reflecting what the news is saying. Just something to think about. If you've got any thoughts on Alibaba, please let me know. But all I can say is that I'm bullish. I'm remaining in Alibaba for the long term, and as it decreases below $80 per share, I'm only going to buy more. All right, so that concludes Alibaba, and then I suppose the only other real company to talk about in terms of losses is Realty Income Corporation. So again, like I was saying with AGNC, the REITs are really getting pumped over the last sort of year, 2 years, and I think this is probably a really good opportunity to buy Realty Income Corporation. I mean, I remember back when it was trading below like $49 per share, that was the time to buy. So that was back here. You saw I did like a lot of purchases back in 2023. The stock price was $49 and $50, around that sort of mark there. Um, so I think I probably won't buy any more. I might. Um, Maybe you guys can help me out with that. Should I buy more now, or should I wait till it gets below, $50 per share? Again, I do want to sort of build up the cash position within the portfolio, even though I say that I do that, but I just keep buying anyway because I'm greedy. I just want to keep buying more assets. But really, I should be building up that cash position in the event of a market correction, and we could be getting into you know, more companies such as Apple and Microsoft at a lower price when they do correct. That's what I definitely want to use the cash for. But yeah, I don't know. I don't know if I'm still. I just keep buying more assets as we get more cash in from the dividends. Um, what else do we want to show for the portfolio? Um, have a look at track your dividends. This is just everything that we've just seen, but just on another website here. The only difference is you get to see the yield on cost that I'm getting within the portfolio. So given that all these yield max ETFs are becoming more apparent within the portfolio, that's increasing the yield here. So over 20% yield. The annual income is now looking at $78,000 in USD because this site only allows Canadian currency and US currency. But obviously, if you make the conversion, what's that, $110,000 before tax of all the dividends that I'll be making in 2024. Again, just remember this is only projected as well. It goes off a basis of what the the company's previous earnings per share is, and or the projected earnings per share, the projected dividend per share would be. And it just sort of goes off that. But what you can see is like with companies, they'll reduce their dividend, they'll increase their dividend. So it could be more or less, but this is just sort of like a rough projection to go by. And then the monthly average income is now sitting at 6,500, which is pretty good. We'll just click this tab here, and we can see the annual income in the top performers. So with roughly $16,000 invested with Coney, every single year they're giving me over $25,000. MRNY, I think we have like roughly $10,000 to $12,000 invested, and they're getting $17,000 worth of total income. Again, this is just projected. Just keep that in mind. AGNC over 8,000, Misty over 7,000, QYLD just under $7,000 again. JetQ $5,000 as well, but JetQ obviously offers a lot more growth potential as well, given that they're invested more in big tech. And then as you can see, the cash position is just sitting down here, being $4,000 here. This is just a graph at all the expected dividends. So January, a little bit of a lower month. We've had, I believe Coney and MRNY not pay as much as what they were projected, which is pretty annoying. But that's the risk you take if you're going to invest in these yield max ETFs. You have to be willing to accept that, if that makes sense. And then in February, we're projected to get $7,000 give or take, which is pretty good. Diversification. Let's have a look at how diverse we are and what our weightings are within all the different companies. So starting at 1%, we have Tesla. This is a cash position sitting at 1.2. MINY, Misty, Apple at 3%, Microsoft at 3%, Coca-Cola, Coney, LTC, Barber, Realty Income Corporation, and you've seen SCHD, given the recent purchase, has made a massive push to the front. I remember SCHD was sitting way at the back here, and given that it is a diversified fund, I wanted to put more money in there, put a more of a weighting in there to push it right up to the front. AGNC, we kind of want to push that to the back, given that it's not really a diversified fund; it's a single REIT. So I want to push AGNC back here, and then SCHD up here, and then obviously JetQ and QYLD takes the reins for the portfolio. All right, let's click upcoming dividends here, and this just gives us a lot more, like a dividend calendar. It gives us a lot more details. So here you can see all the confirmed dividends. So MINY, $500, Coney, $1,000, and they're going to pay me on Tuesday, I believe. And AGNC, they've confirmed a $700 dividend. Realty Income Corporation, $170. Microsoft, just a measly $22. Nothing to view there. Track Your Dividends has a awesome future values tab here as well. So this is saying, within the dividend yield that you have, with the amount that you have invested, in 2025 we can have an annual income of $84,000. In 2026, if we reinvest the dividends, we'll have an annual income of 105. Fast forward to 2030, we'll have an annual income of $275,000. And again, we'll just see if this comes to fruition. 2034, we'll have an annual income just under $1 million if we just keep doing what we're doing, and if we keep reinvesting the dividends, which we are, just with a couple of growth companies as well. Again, if you want to see this all come to light, if you want to see whether it actually comes to fruition or whether it doesn't, and we actually lose money, subscribe now and follow me for the journey. See how we go. All right, well, that basically concludes the video. If you did want to sign up with Stake and get a free stock, you can use the code ChrisM965. When signing up with Stake, you'll get a free stock, and then I'll get a free stock. The code's right there. I'll leave a link in the description. It's basically free money, so why wouldn't you do it? But please give me a like, subscribe to the channel, offer a comment below. That's the only way that he's going to help the channel grow, and helping me get to $1 million, and help me retire off the dividends. But as always, guys, hope you had a good 2024, and I'll catch you in the next video.